Hey everyone, and welcome back to the channel. Today, we're diving headfirst into the AI gold rush. Everyone's talking about AI, but figuring out which companies are actually going to profit is the million-dollar question. We're pitting two AI heavyweights against each other, Micro Computer and Palantir. Both are riding the AI wave, but are they created equal? Stick around, because we're about to break it all down. Which one should you invest in? Or should you avoid both altogether? Let's find out. First up, Micro Computer, ticker symbol SMCI. Think of them as the unsung heroes of the AI revolution. They're the guys building the high-performance server hardware that powers all those fancy AI algorithms. We're talking about the massive data centers that crunch the numbers behind ChatGPT, self-driving cars, and everything in between. They're not developing the AI itself. They're providing the infrastructure. What makes them special? They're known for their cutting-edge designs, energy efficiency, and ability to customize solutions for specific AI workloads. They're basically the Ferrari of server hardware. But is that enough to justify the hype? We'll dig into their financials in a bit. Now, let's talk about Palantir, ticker symbol PLTR. This is a company that's often shrouded in mystery, but their core business is data analytics. Founded by Peter Thiel, Palantir builds powerful software platforms that help organizations, often government agencies and large corporations, make sense of massive amounts of data. They're like the data detectives, uncovering hidden patterns and insights that would otherwise be impossible to find. Their software is used for everything from fighting terrorism to optimizing supply chains. They're heavily involved in AI, using machine learning to enhance their data analysis capabilities. The big question is, can they continue to land those lucrative government contracts and expand into the commercial sector? All right, let's get down to brass tacks. Let's talk numbers. Supermicro's financial performance has been nothing short of explosive recently. Their revenue growth has been phenomenal, fueled by the surging demand for AI infrastructure. We're talking about triple-digit growth in some quarters. Their earnings are also looking very healthy. However, that rapid growth comes with its own set of challenges. Can they maintain this pace? Is the current valuation sustainable? And how reliant are they on a few key customers? These are crucial questions to consider. Remember, past performance is not indicative of future results. Don't just blindly chase the hype. Now, let's look at Palantir. Their growth story is a bit different. It's been more of a steady climb rather than a rocket ship. Their revenue growth is respectable, but not quite as eye-popping as Supermicro's. However, they're showing strong progress in improving profitability. They're becoming more efficient and generating more cash. The big concern with Palantir has always been their reliance on government contracts. They're actively trying to diversify into the commercial sector, and they're making progress, but it's still a work in progress. Can they successfully make that transition? That's the key to their long-term success. Let's talk about the elephant in the room, the AI hype. Right now, anything and everything related to AI is getting a massive boost. But is it justified? There's a real risk of an AI bubble forming. Companies with even a tenuous connection to AI are seeing their stock prices skyrocket. That's why it's so important to do your own research and not just follow the crowd. Both Supermicro and Palantir are benefiting from this hype, but they also need to prove that they can deliver on their promises. If the AI hype cools down, these stocks could take a hit. Beyond the hype, both companies face significant competition. Supermicro is competing with established players like Dell and HP, as well as smaller, nimbler startups. Palantir is facing competition from other data analytics companies, as well as internal solutions developed by large corporations. Technical challenges are also a concern. AI is a rapidly evolving field, and both companies need to stay ahead of the curve. They need to continue innovating and developing new products and services to maintain their competitive edge. If they fall behind, they could quickly lose market share. We can't talk about AI without addressing the ethical considerations. AI algorithms can be biased, leading to unfair or discriminatory outcomes. Both Supermicro and Palantir need to ensure that their technologies are used responsibly and ethically. Job displacement is another major concern. As AI becomes more powerful, it could automate many jobs, leading to unemployment. Companies need to consider the social impact of their technologies and work to mitigate the negative consequences. This is not just a moral imperative, it's also a business imperative. Companies that ignore these ethical concerns could face reputational damage and regulatory scrutiny. And speaking of the future, let's throw a curveball into the mix. Intel is making a big push into quantum computing. Now, that might seem unrelated, but quantum computing has the potential to revolutionize AI. It could allow us to train AI models much faster and create algorithms that are simply impossible with today's computers. If Intel succeeds in quantum computing, it could significantly impact the entire AI landscape, potentially disrupting companies like Supermicro and Palantir. Keep an eye on Intel. They could be a dark horse in this race. But remember, Intel is facing its own challenges, as we covered in a previous video. Their turnaround is far from guaranteed. So, which stock is the better buy? It depends on your risk tolerance and investment horizon. Supermicro offers high growth potential, but it's also a higher risk investment. Palantir offers more stable growth and improving profitability, but it's also facing challenges in diversifying its customer base. If you're a more aggressive investor looking for explosive growth, Supermicro might be a good fit. If you're a more conservative investor looking for steady returns, Palantir might be a better choice. And remember, diversification is key. Don't put all your eggs in one basket. Consider adding both to your portfolio, along with other AI-related stocks. Ultimately, the decision is yours. I encourage you to do your own research, consult with a financial advisor, and make informed investment decisions. The AI revolution is just getting started, and there will be many opportunities to profit. But it's also important to be aware of the risks and avoid getting caught up in the hype. Thanks for watching. Don't forget to like and subscribe for more in-depth analysis of the latest tech trends. And let me know in the comments below which AI stock you're most excited about. Until next time, happy investing.